Good morning, good evening. Welcome back to another breakdown here with the Everyday Growth Advisors. Hope you have been doing okay. Just got back to my desk after a little bit of traveling. As many of you know, this year is going to be a pretty big year for traveling for me, mainly because just have a lot of obligations. And so whenever I can, I come back on here and upload some videos so you guys are on track with your journey. Now, just having a look at where things are on the 2nd of April here. We're looking at the S&P 500, which has pulled back a collective 10.5% so far, which is a pretty good indication that we're pulled back enough for a standard correction at this point. And I wanted to kind of pop by to give you guys a voice of reason ahead of today's Trump reciprocal announcement Liberation Day event. Now, just purely from the macro perspective, I have been tracking the price action for, the past couple of weeks, not really trading much of this wave down and this chop back and forth because I personally have not been looking at opportunities like that. But however, it's starting to look like there is a potential area where we're going to find some bids coming in. Now, the reason for that is not because the price action is pointing towards that, because the price action is pointing against that is the reason. And I always like to think that whenever the market looks like it's going to move lower and create even more pain is the absolute moment when things will start to reverse, because that's how typically the market works. When things are going to accelerate into negative pessimism and where people think that the bottom is not in yet and we're about to go lower, that's typically when the market starts to reverse. Now, there are two extreme scenarios here that can happen, which I'm going to go through, which will be one is a bullish scenario and the other is the continued bearish scenario. And I'm going to go through them individually. So let's go through the bearish scenario first to kind of give you guys the voice of reason here against my initial bias and hypothesis, which my bias currently is that we will bounce somewhere around here. Okay, so let's go through the bearish one first. And the bearish hypothesis is pretty simple. It's that we haven't been able to hold above the 56 or 5700 pivot, which has been the key pivot for SPX to capture in order for bulls to continue to put the pressure on the market. Now, one of the reasons why this hasn't happened is because there has been the looming expectation that there are more tariffs coming on, reciprocal tariffs, etc., slowdown in GDP, higher inflation numbers, which is the reason why this continued drop happened, right? And also at the same time, a little poorer than expected ISM numbers. Now, does all of that typically play into the price action of the market? Yes, it does. But you can see that at the end of this wave here is where we saw something very interesting. In fact, if you look at it and you're a seasoned trader / investor, you realize that this buy up here was almost like a liquidity engineering move, which is a move that typically market makers use to scare retail traders. They push the price down into awaiting stop loss orders or buy orders, which are then reversed and then pushed back down again. So that will be my bearish thesis, is if we can, which we have continued to reject here at the 5640 or 5640 all the way to 5685, which is the potential previous support, which is now turned into a resistance, right? Then the next level that we are likely to come down into, if we do once again break this low here, is going to be around 5400 all the way to 5360. So 5360 to 5400 would be your next area for a potential bounce zone. Okay, between this and here, you don't really have much volume, and so that will be the next area in which the market will be aiming for liquidity, hunting for liquidity to seek out more buyers. But right now, where we are is ahead of when Trump announcements are made. And if you look at the price action right now, it looks like we rejected and we're about to just head straight down, right? But that's exactly why I think that the opposite of that will happen. Because I'm usually taking a contrarian style trade. My view is that Trump comes out and then he says something like, okay, we're going to delay the thing, or we're going to do something different, or we're going to slap different types of tariffs, something along those lines. So the bearish thesis here being very much so a possibility and intact, would mean that the S&P 500 would continue dropping further lower, okay? However, now, the thing is, there are reasons why I don't think further that this will happen. One of the reasons being the US 10-year yield is still continues to drop here, which means that the bond market is pricing in potential rate cuts on the line, okay? Number one, they're pricing in potential rate cuts. And number two, they're pricing in inflation dropping. So that's two pieces of the puzzle that I quite don't understand yet. Why is the bond market reacting this way? And if the bond market breaks below 4.12% here, which is the range low, then that's going to be an even deeper signal that the bond market is expecting a Fed rate cut sooner and inflation is going to go down sooner. So that being said, that's one piece of the puzzle. And the other piece of the puzzle is the weakening dollar, right? Which then gives more support to equity pricing and allows the dollar parity to allow foreign investors to remain interested in buying US equity at more attractive prices. So these are two bigger macro level things that I'm watching in the background, which are still telling me that there is a potential reversal on hand. And when that reversal does play, it's going to be pretty explosive. The third thing is the VIX, excuse me. The third thing is the VIX. And if you look at the VIX here, for the past two times that we've started to get up into this 26, 29 level, which has been, you know, as I always like to refer, all the red ones are where the VIX is elevated. And all the yellow ones are where the VIX is kind of chilled or a little less volatile. But if you look at this, you'll see that on this last time when the market dropped, right? When the market dropped even lower to break those lows and create that liquidity engineering move, the VIX did not spike up to 29 or the equivalent, right? Which means that participants in the market are no longer requiring that many out the money hedges, okay? So in other words, that people are not buying as many out the money hedges. They might be, you know, short-term hedges on in the money or at the money, but the out the money ones aren't that much, which means that the market might be coming close to the VIX collapsing downward, okay? So remember, this is all just my analysis from a objective point of view, and I also like to have, you know, clear, transparent communication with all of y'all to make y'all understand that 3 out of 4 times the market's going to be in bull mode. So right now, where we are, looks like this was a liquidity engineering move, but we didn't get confirmation because there was no break of structure back ahead above this 56, 57, which then, you know, leaves that downside action on the table. But at the same time, I'm of the view that today, maybe based on the announcements, we might have a buy the rumor, sell the news kind of event. And that might, you know, kind of lead to the market moving higher ultimately in the next couple of weeks. And then on top of that, you have April being a seasonally positive month for markets, okay? So all of those things combined together should give you, you know, the big picture. Now, if you look at this sector based, just sector by sector, right, on the weekly, you'll realize that technology has retraced back all the way back down to where we were. And that if it really does indeed break further below, it has this much downside, okay, from where you are. So obviously don't go try shorting the sector because it doesn't make sense. The risk to reward ratio is a bit wonky. But just showing you the sectors and where they are. In fact, if you look at energy, which of you guys remember a couple of weeks back, I alerted you on XOM as a potential trade right here, right where we were. And I talked about the potential for it to break out here and then head higher into the 120, which is exactly where we are right now, right? So congratulations to all of you who played this. I took shares of the business, which are now up a modest 10%, which is pretty good for me. And I'll be happy to trim them once they get into the 120-25 range, where I will take some profits off the table, right? But congrats if you played this one. It was a great trade, nice swing trade. almost no drawdown, just a straight zoom to the upside, right? And if you look at sectorially, energy has been doing pretty good, right? Nice bounce, now approaching that rejection zone, but even within the rejection zone has found kind of a bounce within it. So it has the potential to go higher into the 95 and then higher to 98 on XLE, right? Has that potential. But of course, if you've already missed this, then don't even try for that upside anymore, because you're probably likely priced out, right? So you have to be entering this trade when we had spoke about it, but not now. So energy, very nice. Move is done, right? Financials in a bit of a no man's land here. You can see this is your potential support, which you were at, and this was your potential rejection area, and you're sitting firmly in between right now. So there is no risk reward skew here. There is no positive outcome that would give you an edge, essentially. So I would ignore the sector altogether right now. In terms of healthcare, one of the sectors that have been very weak in the past couple of weeks, but really trading sideways if you look at it, right? And then consumer staples, which have been doing pretty decently in the backdrop after being sold off, and then the market realizing, oh, wait a minute, this is actually a sector that's pretty strong. And consumer discretionary, one of the worst performing sectors because of Tesla and Amazon combined together, driving this entire sector down. At some point of time, this sector will be the leading sector. And so I like to say that whenever a sector is down, then, there comes a time when it will revert to the mean and try to exceed expectations. But one of the sectors that are really surprising me right now are materials, if you look at it. Pretty nice recovery back from the lows and has the potential to rally off this momentum because it has now formed a higher low twice, even though it had that liquidity engineering move, right? So this would be one of the sectors that I'll be looking at. And then you have industrials, double bottom, potential retest of the 135, but I don't like it. It's sitting firmly in the middle. And then communications, which is also correct downward, along with Meta and stuff like that, right? Real estate, this is a sector which will be largely driven by interest rate changes. And when the market starts to price in that rate cut, then this one's going to start to rise again, right? And utilities, which has been in the consolidative phase and has a upside pivot of $80.50 and a downside pivot of about $74.50. So either break on this side or that side will lead to a change of structure. The sector that has gotten completely destroyed is actually semis, if you think about it. Semis have been having a very tough time in the past couple of weeks, and it actually, doesn't make sense, but does make sense. It's one of those things that I don't really quite get, but at the same time, I understand that because this sector is cyclical in nature and then also at the risk of import taxes, that's the reason why a lot of these, headwinds are kind of acting against it. You add on the DeepSeek fiasco pressures onto it. It creates the illusion that this, sector is going to be sold off for a while. But I personally think this is a great opportunity for you if you haven't added any allocation to your portfolio on semiconductors. This is a great time to add some, right? Because if you're in this for the long run, this short-term move doesn't really mean anything. And we all know that semiconductors will be a sector that will be prevalent for the next 10, 20, 30 years even, right? Who knows how long more. Okay, now for just to go back here into the bullish scenario, I think that if today, I don't think it'll happen during market hours, or maybe it will, who knows. But when Trump makes his announcement, if we are able to get back up above 56.85, 57.11, which is here, and start really breaking in above this range high here, which was at 50, let's just call it 5,800, right? That will then set us up to get back up into the 5,870 level, okay? And that's what we're really looking for here. Max pain, because what will happen is everyone who is short, right, right now, everyone who's short will start to scramble for upside exposure, causing a squeeze on short sellers, which then makes them close out their shorts, which then converts those trades into longs, which then creates a potential gamma delta squeeze, some kind of event like that. And so that's my view. That's my preferred view. And the reason that's my preferred view is because that's a max pain view, which means a lot of people would lose a lot of money if that happened. And we all know that the market loves a max pain scenario. So that would be my projection for, you know, this coming week or the next week, whatever timeline. I'm not very good at timelines, but they're just my macro thoughts right now. And once again, you know, this is not financial advice. This is just giving you guys kind of my view of things and make you see that, you know, this, no matter how bad people think the market is, at the end of the day, one headline, one piece of news, one thing said, and everything can be back to all-time highs within a week. So don't try not to get into the doom and gloom scenarios. They don't pay you. Stay invested, stay sharp, stay ahead of the market, and I'll see y'all back on the next video. So I hope you have a good one. Trade safe and be smart. I'm gonna put out maybe another video in the next 1 to 2 days with all of the individual charts and opportunities that I see. Right now, everything is kind of stuck in the middle if you look at it. And so I'm waiting for some interesting pivot points to set up on all these that I'm watching and confirmations before I can actually give you insights. But I'll have another video coming very soon to give you guys a primer on the things that I'm watching so that when it does happen, you'll be prepared for it. So looking forward to that one, and I'll see you all in the next video very soon. Peace out and happy trading.